This is David. David is an ambitious stickman. He is 30 years old. He has a steady job, a laptop, and a big dream. David wants to stop paying rent to his landlord. He wants to own his own kingdom. He finds a beautiful suburban house with a white picket fence. The price is $300,000. David looks at his bank account. He has saved $30,000 for a 10% down payment. He goes to a giant, shiny bank to ask for a loan. A banker in an expensive suit smiles warmly. He tells David that he is approved for a classic 30-year fixed-rate mortgage at a 7% interest rate. The banker says, "Congratulations, David. Your monthly payment is only $1,800. David feels an immense wave of pride. He signs the thick stack of papers. He takes the keys. He thinks he is a successful homeowner. He thinks he is building equity. But David cannot see the hidden mathematical monster behind the contract. He does not know that he just signed a 30-year financial death warrant. Today, we are going to expose the dark reality of the mortgage market. We will show you the terrifying math that banks hide from you and how the system turns hard-working stickmans into lifelong financial slaves. To understand the trap, we must look inside David's first monthly payment. David opens his banking app. He proudly sends his first $1,800 to the bank. He thinks that his total debt of $270,000 drops instantly by that amount. He is completely wrong. Inside the bank, a hidden mathematical engine called the amortization schedule begins to run. In a 30-year mortgage, the bank does not split your interest and your principal evenly. The bank wants its profit first. The system is heavily front-loaded. Out of David's first payment of $1,800, a staggering $1,575 goes directly into the bank's pocket to pay the interest. Only $225 goes toward paying off the actual house. David is shocked. He is bleeding cash, but he barely owns the front door of his property. Let us fast forward 10 years. David has worked hard. He missed holidays. He skipped expensive dinners. He sent his monthly check exactly on time for 120 months. He has paid a total of $216,000 to the bank. David decides to sell the house and check his remaining balance. He expects his debt to be almost gone. He opens the statement. His remaining debt is still $220,000. He has spent 10 years of his life working, but he only cleared $50,000 of his actual loan. The other $166,000 evaporated into the bank's corporate profit margins. David did not buy a home. He just rented a property from the bank for 10 years, and the bank charged him a massive premium for the privilege. But the trap gets even deeper. If David stays in the house for the full 30 years, the total math becomes an absolute horror movie. By the time he makes his final payment at age 60, he will not have paid $300,000 for his home. Because of the compounding 7% interest rate, David will have paid a grand total of $650,000. He paid for his own house once, and he bought a luxury yacht for the bank president as a free bonus. David spent his entire youth, his prime working years, and his mental health supporting a piece of corporate paper. David is drowning in the system, but the bank is still not finished with him. There is a second, hidden layer to this trap that catches 90% of modern homebuyers. The second layer of the trap is the hidden cost vampire. David believed that his monthly housing budget was fixed at $1,800. But a house is not a rental apartment. A house is a living, breathing, financial black hole. Every year, the local government sends David a bill for property taxes. Every year, the insurance company raises the premium to protect the house from storms. Every month, the Homeowners Association demands a fee to cut the grass in the neighborhood park. Then, the water heater explodes, the roof starts to leak, the air conditioner dies. David cannot call a landlord to fix these problems. He must pay out of his own pocket. These hidden costs add another $700 to his monthly expenses. David is no longer saving money. He is living paycheck to paycheck. He is trapped in a golden cage. If he loses his job for just 3 months, the bank will foreclose on the house, kick him out onto the street, and keep every single dollar he already paid. The bank takes zero risk. David takes all the risk. How can a regular stickman like you defeat the amortization monster and win the banking game? You must use 2 secret financial weapons. Weapon number 1 is the bi-weekly strategy. Instead of making one large mortgage payment every month, tell your bank that you want to pay half of the amount every 2 weeks. Because there are 52 weeks in a year, you will end up making 26 half payments. This equals 13 full monthly payments instead of 12. By sliding just one extra payment into the year without noticing it, you magically shave 6 full years off your 30-year contract. You save over $80,000 in pure interest. Weapon number 2 is the $1-a-day principle. Whenever you send your monthly payment, add an extra $100 directly to the principal balance. Make sure to check the box that says "Apply to principal only." This tiny extra step attacks the root of the loan. It stops the interest from compounding. By combining these 2 weapons, you can crush a 30-year mortgage in less than 19 years, saving yourself a fortune and buying true freedom. David sits on his porch. He looks at his white picket fence. He stops listening to the friendly banker. He opens his calculator and starts fighting back. A home should be a foundation for your wealth, not a trap for your future. Do not let the system trick you with low monthly numbers. Look at the total cost, attack the principal early, and remember that true ownership only begins when the bank no longer owns your life. Stay smart, pay down your debt, and break the chains of the 30-year trap.